Imagine going to the store and finding that your favorite items cost twice as much as they did last year. That's not just a hypothetical scenario, it's a reality for many. Inflation affects us all, but there are ways to fight back. Let's dive in. Let me introduce you to Sarah and Tom, a young couple with dreams of buying their first home. They diligently saved money, believing that their savings would bring them closer to their dream. But as years passed, they noticed something alarming. The price of homes in their area was climbing much faster than their savings were growing. They felt like they were running on a treadmill, working hard but getting nowhere. This is the reality of inflation. It's not just about rising prices, but about dreams that seem to slip further away. So, what exactly is inflation, and why does it matter to you? Simply put, inflation is the rate at which the general level of prices for goods and services is rising, and subsequently, how purchasing power is falling. But let's break that down. Imagine your favorite coffee costs $3 today. Due to inflation, next year, the same coffee might cost $3.30. Your dollar isn't stretching as far as it used to. This isn't just about paying a bit more for your morning brew, it's about how every dollar you earn and save is losing value over time. From groceries to gas, everything starts costing more. But the real kicker? Often, our incomes don't keep up with this price hike. Inflation can sneak into your life in subtle ways, slowly eroding your financial stability. Understanding it is the first step in building a defense against it. Now that we understand inflation, let's talk defense. How can investing act as a shield against the erosive power of inflation? The answer lies in making your money work for you, growing at a pace that not only matches but potentially exceeds the rate of inflation. Let's consider the stock market. Historically, stocks have offered returns that outpace inflation. This is because as prices rise, so often do company profits, and consequently, stock values. It's not just about stocks though. Real estate investments can also be a hedge against inflation. As living costs rise, so do property values and rental incomes. Even certain types of bonds and commodities like gold can play a role in an inflation-resistant portfolio. The key is to choose investments that have a track record of growing faster than the rate of inflation, ensuring your savings don't just sit idle but grow robustly enough to preserve and enhance your purchasing power. The role of diversification. Diversification is your strategic ally in the battle against inflation. Think of it as not putting all your eggs in one basket. Why? Because different investments react differently to economic changes, including inflation. By spreading your investments across various assets, like stocks, bonds, real estate, and commodities, you reduce the risk of your entire portfolio being affected by a single market fluctuation. For instance, when the stock market is volatile, bonds might provide stability, or when inflation diminishes the value of cash, assets like real estate or certain stocks might be increasing in value. Diversification isn't just about minimizing risk, it's about positioning your portfolio to take advantage of different opportunities that arise in changing economic climates. It's like having a well-trained team, where each player has a unique role, working together to protect and grow your wealth, no matter what the economic weather brings. Real-life budget adjustments. Inflation doesn't just challenge your investments, it also tests your everyday budgeting skills. Let's explore some real-life adjustments that can help you stay ahead. First, consider revisiting your budget regularly. As prices change, so should your spending priorities. It might mean prioritizing needs over wants or finding more cost-effective alternatives for certain expenses. Next, let's talk about shopping smarter. Look for discounts, buy in bulk, or choose generic brands over name brands. Small savings on regular purchases add up over time. Also, consider the energy costs in your home. Simple actions like using energy-efficient appliances or fixing leaks can reduce your bills, leaving more money in your pocket. Another key aspect is building an emergency fund. In times of rising prices, having a financial buffer can be a lifesaver, helping you avoid high-interest debt if unexpected expenses arise. Lastly, if possible, try to increase your income. It could be asking for a raise, starting a side hustle, or acquiring new skills for a higher-paying job. Increasing your income can help you keep pace with rising living costs. By making these budget adjustments, you're not just cutting costs. You're building a lifestyle that's resilient to inflationary pressures. It's about being proactive and adaptive, ensuring that your financial health stays strong even when the economic winds change. Understanding government bonds and tips. In the world of investing to beat inflation, government bonds and Treasury inflation-protected securities, or TIPS, play a crucial role. Let's break these down. First, government bonds. These are essentially loans you give to the government, and in return, they pay you interest over time. They're considered a safer investment because they're backed by the government. However, the interest rate on standard bonds may not always keep up with inflation. That's where TIPS come in. TIPS are a type of US Treasury bond specifically designed to combat inflation. Here's how they work. The principal value of TIPS adjusts with inflation as measured by the Consumer Price Index. So, when inflation rises, so does the value of your TIPS, and thus your interest payments increase accordingly. It's a built-in protection against inflation. Investing in TIPS can be a smart move if you're looking for a low-risk way to preserve the purchasing power of your savings. They're especially appealing for those nearing retirement or anyone looking to maintain a stable value of their investment in real terms. But remember, while TIPS provide inflation protection, they usually offer lower yields compared to other investments like stocks. So, they're best used as part of a diversified investment strategy. In summary, both government bonds and TIPS can be valuable tools in your anti-inflation toolkit. By understanding and utilizing these assets, you can create a more resilient investment portfolio that stands strong in the face of rising prices. For more insights into what to avoid while building your investment portfolio, be sure to watch our video on the top 5 investing don'ts. It's packed with valuable lessons that complement what we're discussing today. Click on the left side of the video. I will meet you there.